Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
Jared. Jared's old school. Jared's one of the originals when there were just a few of us. All right, let's see. What's hello? All right. What's going on? Well, let's see. BLS turned in some numbers that weren't what everyone wanted to see. Now they're all making excuses and changing belief system again. Every time the Fed gets information they don't like, they just change the guidelines of their guidelines. Like there's only one rule. And then they get the BLS data. There's only 2 rules. Also, those are new rules. The other rule didn't count. This is no longer what we look at. We look at these things. We set interest rate policy based on butterfly migration, not investor confidence, consumer confidence, GDP, input costs, layoffs, or inflation. Butterfly migrations. When we see the butterfly migrations, less uncertain, then we'll make a decision. Until then, we're going to do nothing. The same nothing we've always done. And even if we do something, it'll still mean nothing. The Fed, am I right? These same guys, Neil Kashkari and all these douchebags, they just flip-flop all the time. It's just ridiculous. Anyway, yeah, what are you going to do, right? What are you going to do? All right, let me see. We have to talk about the U.S. courts blocking tariffs. We have to talk about the shrinking in the economy. We need to talk about that a little bit. And then the bets that people are making, people being banks, the bets that big banks, hello, are making on stablecoins. So even though the Genius Act hasn't passed yet, it's en route. And so it looks like the banks are pretty certain that that's going to happen. So I think we should be pretty certain that's going to happen, which is going to put a huge buyer in the market now for treasuries, a new big buyer to the tune of maybe up to a couple $1 trillion, which is significant. I think if any of us here were trillionaires, we would be happy. Well, maybe not. I think if we were trillionaires, we would be the object of quite a large amount of animosity and ire Enmity. Anyway, how was the hypercycle meeting? We didn't have one this morning. We had one yesterday. There's one after this call today, but that's like a group one. And mostly nothing gets accomplished. It's just, yeah. All right. Let's see. Where shall we begin? Okay, if you have any questions, well, technically that was a question, Michael. Well done. But write the word question so I can see it. Otherwise, we're gonna have to look at this news right here. Okay, so you guys probably heard a U.S. trade court ruled that Trump has overstepped his authority by invoking an emergency law to impose sweeping tariffs on nearly every country. So saith this trade court. Economists at Goldman Sachs, though, to be on the other side of that seesaw, said that the White House likely has a few tools at its disposal to ensure that it is only a temporary problem. Lawyer James Randall said the ruling marks the first in many cases still pending and is the first opinion to really address the meat of the plaintiff's challenge. So, Donald Trump can still find workarounds after, what somebody was like, this is a major blow to the core part of his economic agenda. But the long story short is the U.S. Court of International Trade, CIT, on Wednesday ruled that the president had overstepped his authority by invoking the Emergent International Emergency Economic Powers Act, or the IEEPA, to impose sweeping tariffs on numerous countries, as we all know, and he had the chart and all this kind of stuff. Great. So, New York-based court, which is this Court of International Trade, ordered a permanent halt to most of Trump's tariffs and further barred their future modification. So, a panel of 3 judges gave the White House 10 days to complete the formal process of stopping the tariffs. And, of course, the Trump administration immediately appealed the ruling. Goldman Sachs economist said the White House does have a few tools at its disposal that could ensure the ruling is only a temporary problem. The ruling represents, and this is from the Goldman Sachs, so you got to understand, there's a little bit of snakiness in whatever they're saying. Just assume that this is being told to you by a fucking reptile if it's from Goldman Sachs. Anyway, this ruling represents a setback for the administration's tariff plans and it increases uncertainty. Oh my God, we just live in a world of uncertainty. Nothing is certain anymore. What with all this certainty on top of uncertainty? Anyway, it's a setback for the administration's tariff plans and increases uncertainty, but might not change the final outcome for major U.S. trading partners, Goldman Sachs economist said in a research note. Well, one, if he's an economist, he's a moron. So don't go gambling on this dude's advice. Anyway, for now, we expect the Trump administration will find other ways to impose tariffs. Some options could be the ruling blocks the 10% baseline tariff imposed by Trump on imports, as well as the additional duties on China, Canada, and Mexico, but not sectoral levies such as those implied on steel, aluminum, automobiles, etc. So the Trump administration also has other legal means of imposing tariffs. They have Section 122 of the U.S. trade law, Section 301, investigations, as well as Section 338 of the Trade Act of 1930. So basically, Section 122 of the Trade Act of 1974, before probably many of us were alive, does not require a formal investigation and could therefore be the swiftest way to get around the roadblock. So they would just enact this formal investigation per Section 122 of the Trade Act, 1974. So again, I guess this court, good. I mean, they stood up and said, this is what we see as far as the law. And the lawyers of the White House will go, cool, well, we'll just do the same thing this way. And I sure hope none of you guys took any envelopes full of cash, because we're going to be looking into your tax returns forever. Those guys just welcomed in audits for the rest of their lives. Anyway, the administration could also quickly replace the 10% across the board tariff with a similar tariff of up to 15% under Section 122. They noted, however, that such a move would only last for up to 150 days, after which law requires congressional action. But that's almost 6 months. So Trump could also swiftly launch Section 301 investigations on key trading partners. So basically, kind of weaponize the investigation process. It's a tool. Anyway, this would lay the bureaucratic groundwork for tariffs, although Goldman said that this process would likely take several weeks at a minimum. So you could do one and then the other. It could be a little 122 with some 301 behind it. What? Section 232 tariffs, which are already in place for steel, aluminum, and auto imports, could also be broadened to other sectors. Hence the sectoral attack. This trade law allows the president to take action against threats to national security. You could certainly levy that argument based on border stuff. You could say, you could probably say Mexico, China, loosely. Immigrants, terrorists crossing the border, and then China weapons and spying, and you could levy that against everyone, couldn't you? You could make an argument for everyone, and then it's another set of courts to decide if they want to get audited for the rest of their lives. Anyway, Section 338, meanwhile, allows the president to impose levies of up to 50% on imports from countries that discriminate against the U.S. What? However, this one has never been used before. Ever. But I feel like everyone discriminates against us. Do they not? Not they do. Anyway, a founding manager and partner at Shoals Trade Law echoed the possibility that the Trump administration would seek workarounds, including looking at ways the White House has imposed tariffs in the past. So when you see the market going up today, this is a dummy bump. This is a dummy pump. And there's a lot of dummies out there. So hooray for dummies. Fools and their money soon part ways. I think at some point, hopefully Brandon is going to do a full post-mortem of this guy, James Wynn, after he loses all of his money on hyper liquid. God, I think he's gone from close to 95 million down to, I don't know, he's got to be less than 10 million now, maybe 5. I don't know. He's in a trade right now, and it looks like he's going to get destroyed, but compulsive gambling, man. Anyway, so that's where we're at. They have had Section 301 tariffs on Chinese goods, even under the previous administration, which were pretty harsh. So it looks like the administration will look at those provisions again and see if they can use 232 or 301 or some other mechanism where they can enforce these tariffs. This same analyst, Schultz, also pointed to the fact that such tariffs require investigations, to which he said, I think that's different here. All of the tariffs that we're talking about today with IEEPA, right, were issued under executive order and pretty much just by the executive branch. When you look at these other sections, you're going to have the involvement of the Commerce Department and other agencies investigating whether there really has been damage to justify tariff action. But those investigations take months. And who knows how many of those crooks are even left. Sorry, I shouldn't say crooks. Those incredible bureaucrats are left after the Doge went through and fired as many thieves as they could find, which there's a lot of them. So then you think, okay, well, where does the Supreme Court fit in? So James Ranzel, a partner at law firm Cassidy Levy Kent, said that his name's not one of the names on it. If you're a lawyer and you're at a law firm, but your name's not one of the names on it, then you're not really much of a lawyer. Anyway, this guy that's not much of a lawyer said that the court opinion marks the first of many other cases still pending, and that but it's the first substantive opinion out of a federal court to really address the meat of the kind of charges. So he said the speed of the Trump administration's appeal was very unusual and suggests the government could be working through the night to prepare its motion for an emergency stay of the order. Everybody's just like pew 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 pew. I wonder if they're using GPT to write these writs. Probably are. He added, it's certainly a possibility that the Supreme Court could end up having the last say, but there's not a lot of precedent on this particular statute and on similar actions by the president. So there might be an interest that the Supreme Court has in taking this up. Remember, the Supreme Court's essential rule is they don't want to rule on a bunch of things that are murky. One case, one controversy. That's what the Supreme Court likes. Clean, elegant, something that a 90-year-old that's fallen asleep during all the testimony can rule on. One case, one controversy. So I wouldn't be holding your breath for the Supreme Court. Steve Blitz, a chief U.S., he's an economist. Yeah. Take it with a grain of salt. He said that Trump had a very good level of understanding of how to play the courts to get what he wants from playing for time. In terms of playing for time, the first thing he'll probably do is an emergency appeal to the Supreme Court, wanting to get a ruling from them that basically says you can keep these tariffs in place while the appeals process runs through, which is probably accurate. Because again, this court was coming after the fact saying, hey, this isn't right. He says it is. They disagree. Some judges disagree. They appealed the ruling. So normally, I think there's an argument to be made that the tariffs would stay in place until the appeal was settled, which again, take a long time. He said this kind of king-like executive order was always going to go out at some point, and it was going to always find its way into courts. The difference being a monarchy versus being a constitutional democracy is the legal system. So, yeah. So he's not a big fan of the Trump. It looks like probably one of those Democrats that put all his money in that one lady that was running. What was her name? Yeah, doesn't matter. She's selling insurance or some other stupid shit by now. Anyway, equity markets around the world broadly rose on Thursday as investors reacted to the legal ruling. Asia Pacific markets ended up the day mostly higher. U.S. futures had jumped before the open. A lot of that, I think a lot of that's been given back. I can take a look. Matter of fact, we can take a look right now. Where are these markets at? Where's these markets at right now? Where are the markets at? U.S. markets. Okay, very, very marginal up. Dow's up, NASDAQ up just a skosh. S&P's up a skosh. Well, NASDAQ's up 0.7 of a point, 1 basis point on the Dow Jones. That's nothing. Gold's up a hair, a wee bit. Yeah. I mean, kind of a nothing burger. The 10-year is down. That's interesting. The 10-year is down quite a bit, like 1%. Oil down. Hold up a few pennies, $19, I think. Anyway, yeah, that's where we be. Okay, make sure I haven't missed anything. I don't think I missed anything. Let's see. Holy cow, it's getting more and more difficult to log in, especially on the DI. Why is it more difficult? Isn't it the same? Isn't the login process exactly the same, you guys? Has that changed? I feel like nothing there has changed. I don't know. Maybe I'm wrong. Maybe Brandon has the final word on that. He would know whether I'm wrong or whether I'm right. Looking over here at these crypto prices, what's going on? You got a big bump. Did you guys see that? You had a huge bump last night out of Ethereum, and then it gave it all back. Like by the time our market's open, it didn't give it all back. It's kept about it's up about a point. But I thought that was funny. It's good for us. Yeah, it's good for us, man. I want a lot of stuff to happen and nothing to happen. That's all I want. I want a lot and nothing. At the end of the day, I want nothing to happen, but I want a lot of stuff to happen in between that nothing. Make me them monies. All right. Let's get back over here. Okay. So some data comes in. The U.S. economy shrank, got smaller in Q1 because, math. And so at a certain point, Jerome and the other dickheads can say strong and resilient 1,000 times. And he can say it's not in the, what did he say over and over? It's just not in the, it's not in the data. We're just not seeing it. What are you not seeing, Jerome? You're not seeing layoffs. Okay, well, you're seeing layoffs. Okay, but they don't consumer confidence, which is in the gutter, but that doesn't count. Well, I guess I'm confused. Businesses are saying they're not doing anything. They don't know whether to shit or wind their watch because of all this tariff stuff. So they're doing nothing, and nothing leads to layoffs and firings and less hours worked. So like, and also GDP shrank. But no, Jerome, yeah, you're right. Strong and resilient. There's nothing in the numbers. There's nothing in the data. He said it. He almost said it like a condescending asshole too. To a couple of reporters, he's like, there's just nothing in the data. Except the data. You dick. Like these, yeah, man. Well, whatever. Anyway, U.S. confirmed, regardless of what Jerome Powell says, the U.S. confirmed the economy contracted by an annualized 0.2% in Q1, marking the first economic contraction since 2022. But I mean, it's not in the data, right? It's not in the data. I guess then I would ask, what data does the Fed use? Because if GDP, CPI, inflation, layoffs, sentiment are not in their data, what the hell does the Fed look at? Is the ridiculous? Anyway, good stuff, man. Okay, the economic slowdown follows President Trump's global trade war that imposed tariffs up 104% on over 180 countries. However, Bitcoin and crypto markets have shown a pretty much muted response. Bitcoin's trading kind of flattish. It's flat. It's 107 and change. It's down like not even 0.2 of a point. Ethereum, on the other hand, up 1%. Was up as high as 4% earlier, almost 5%. I said, oh God, we got left behind. But we didn't get left behind. We're still in the game. All right. So the U.S. economy has had its first actual official on paper, can't deny it, can't blag your way or word your way or dance your big ears around it, Jerome, contraction. That's all. Those are all just hyphenated and then the word contraction. So the revised official statistics, what does that mean? That means that when the BLS first gives you numbers, they are BS. They do this because, I don't know. Okay. There is because that they say because we gather all this data and it's messy data, it's noisy, and we have to clean it. And so we give you a first number and then we give you a revised number. Weird that the revised number is always down. It feels like if you knew that there was a statistical deviation of 100,000, let's just say that every time we say that there's 200,000 jobs and we look back in time, it was actually 100,000. Seems like if you were the BLS, when you put numbers out, you would just go ahead and cancel that 100,000 that you know you're wrong about every single month, going back for fucking years. So I guess I'm confused. But then there's the other side, the conspiracy side, which I don't want to fall into that, but which is that the BLS is as political an organization is as the Fed. It's as much theater, just political theater, just bullshit theater, as is the Fed. And so they kind of promote an idea or they pump some hopium. Everything's fine. Everything's great. Strong and resilient, just like the guy with the big ears said, that guy that somehow made $55 million during government service. What hell of a guy, right? I guess he's a good investor. Like he's really good, like Nancy Pelosi, just really clever at math, like Nancy Pelosi, just a really shrewd observer of markets. Really gets it. while her gay husband's giving fucking hand jobs at a truck stop, like every Tuesday or something. Anyway, that guy's a weirdo too. You want to read that guy's a train wreck. Anyway, so yeah, a lot of people think that the BLS puts out bullshit propaganda numbers, and because people don't pay attention to revisions, they get away with it because you get the big reaction when they put out their bullshit number, their propaganda number, and then when they go and revise it, they're real quiet. They're like, like 3 months ago, we were off by like 190%. Yeah. We were actually in the deep throes of recession. Most of you motherfuckers were getting fired. But no, yeah, our bad. Yeah, our bad. Yeah. All those people that just imagine this. Imagine you're at work and the BLS comes and says, oh, listen, hey, we overestimated employment. You actually don't have a job. Clear out your desk, get your shit and go home. You're like, wait, what? I don't understand. They're like, yeah, you don't have a job. Yeah, we got it wrong. We always get it wrong. But we wanted everybody to feel good. Like, I don't feel good. You're just telling me to leave that I'm fired. Yeah, well, listen, hey, revisions, am I right? Revisions. God. Anyway, the official statistic revealed on Thursday, the economy shrank by an annualized 0.2% during the first quarter of 2025, which should surprise none of us here. It sounded like kind of a deja vu because the U.S. report, they reported initial data at the end of April and published its final and revised report Thursday morning. So since the economic slowdown isn't entirely a surprise, the response from the cryptocurrency market's been pretty much muted. Also, Bitcoin and Ethereum have been playing a little bit different game than some of the other assets. I think Bitcoin is they're really kind of marketing the store of value, the uncertainty hedge thing. I don't know. I used to say that years ago. Even Jeff Snyder, like we were on a stream. It was me and him and Emil. And and Jeff is, just so you guys know, Jeff's been covering Bitcoin since 2013. He tends towards gold, but that's because he's kind of old school. But Jeff gets it. And we had discussed this idea of a hedge against uncertainty. And then that kind of just way before every politician just says the word uncertainty as a get out of decision free card. So, hey, listen, I don't have to make decisions because I said uncertainty. You heard me say it, didn't you? I said it. Everybody heard it. Therefore, I don't have to make a decision. I don't have to make any decision. I don't have to say anything. I can just sit up here and fishtail. Let's just slither around. Old salamander. This old salamander looking for his tail, growing a new one. Anyway, the response from the cryptocurrency market's pretty flat, right? Pretty muted. And let me just say uncertainty. Therefore, from anything else from here forward, I said the word uncertainty. Therefore, you can't hold me accountable for anything. Okay? You guys heard it, right? Matter of fact, everybody here, everybody in the chat, I want you to go ahead and say you're feeling uncertain today. That actually, what is it when a priest, I've absolved you? Is it absolved? Is that the right word? I've never been to one of those boxes where a priest says that. Anyway, I absolve you. I indemnify you of anything you should do today because you're uncertain. And once you're uncertain, get out of jail free, baby. Nothing you say or do has any teeth. I'm feeling it. Oh, good. Well done, Sean. There's a guy who can't be held accountable. Who else doesn't want to be held accountable? I certainly don't. Accountability, accountability. Anyway, cup of humility. We could go on and on. The largest mover in the top 10 tokens by market cap is Solana, which is down 1.3% on the day. And again, 3% in crypto just ain't anything. Oh, Deborah's feeling uncertain. You know what? You just got yourself absolved of all your daily sins. Yeah, Linda, she ain't gonna be held accountable for nothing. Login process is never. I didn't think that. Yeah, see. I don't think that login process is any different. I think it's the same. And if Brandon put 5 dots on the end of it, you can bet that 2 of those dots had curse words rolled up inside. Brandon is not feeling uncertain today. He has certainty. Anyway, let's see. So we can be like to gaslight the economy with something. Yeah. So okay. To carry on, revised figures showed that GDP, the value of goods and services provided within a country, gross domestic product, decreased by 0.2 of a point in the U.S. for the in the first quarter of 2025. Okay, so the BEA, the Bureau of Economic Analysis, said that the decrease in U.S. gross domestic product, the value of goods and services, reflects an increase in imports and a decrease in government spending. Okay, that's a whole other issue. Like that's a whole other huge issue with the problem of the way GDP is constructed. The fact that, I mean, governments can spin up. I mean, governments pay people to dig holes and pay people to fill them in, pay someone to watch and pay someone to write about it, pay someone to talk about it and sum it all up, and pay someone to hire all those people, then pay that guy to fire all those people. That's government spending. It's beyond ridiculous. But and by the way, government spending makes up roughly, half of GDP, like almost half. So that's a problem right there. There's definitely problems in the way GDP is configured, but whatever. When we had a lot of demand pull, some pull forward, people front running tariffs and all this kind of stuff, the thought was going to be this is going to be a bad quarter anyway, so I'm going to give them some of that. But that wasn't uncertain either. That was pretty certain. That was incredibly certain. If people are buying a bunch of shit right now to avoid taxes next Tuesday, then there's going to be a lot of pull forward of demand. And next Wednesday, probably not going to sell as much shit, are we? So, come on, man. There's a lot less uncertainty. The only thing I am uncertain about, I'm not uncertain. There's no such thing as perfect certainty, but that's just a sloppy ass kind of just a fucking weak excuse. I'm uncertain. Yeah, bro, everybody's uncertain until things converge to a point. But we have math and we have science and we have some predictability about human behavior. And come on, man. Anyway, this all follows President Trump's global trade war, which saw more than 180 countries slapped with tariffs of up to 104%. Markets broadly tanked as Trump had applied, revised, reapplied tariffs, walked them back, talked them forward, twisted them sideways, what have you. Yeah, and so this affected a lot of the trade partners, China, the UK, Europe, Mexico, Canada, go down the list. So recently, the trade war has appeared to ease because Trump has extended out those deadlines for the European Union renegotiations. Then you have this court coming out here and saying crap and all this. Anyway, but with all this backdrop, Bitcoin still cracked all-time highs. So, and listen, people are like, oh my God, Bitcoin's down. Bitcoin's at $107,000, man. 107,000. You just start thinking, God, should my money just be sitting in Bitcoin? Should it? There's an argument. Anyway, it appears the trade war wasn't without its economic consequences, however, compared to the fourth quarter of 2022, which saw a 2.4% gain in GDP. Again, going into the holidays, you kind of got to average that out. But anyway, the BEA, Bureau of Economic Analysis, reported a clear deceleration in consumer spending. Yeah, no shit. If you think you might be fired, or you see your hours getting cut, and you realize there's not a lot of jobs to get, or you can't go laterally, meaning you'll have to take a pay cut for the next job. You probably curtail your spending. You are balance sheet sensitive. So yeah, there's a clear deceleration in consumer spending. Yeah, no shit. And on top of an increase in imports and a downturn in government spending, and the crypto markets basically just said, I don't care, bro. Crypto markets basically said, bro. None of this matters, bro. Crypto markets, am I right? Okay. Oh, we have a cool little picture here. Okay. We should talk stable coins. Stable coins cometh. I'm not gonna do my normal thing where I just pick on how garbage Tether is. It is, but we all know this. Everybody here understands Tether is a counterfeiting joke, right? So let's just get past Tether. So forgetting about Tether for a moment. On May 21st, the Genius Act cleared a very key hurdle in the Senate. So this is a week and a half ago. They got the votes needed to advance legislation. And just so you guys know, the Genius Act is the Guiding and Establishing National Innovation for U.S. Stablecoins Act. Okay, great. So lawmakers voted to officially take up the bill for debate and amendment, setting on a path towards a final vote after the Memorial Day recess. Well, guess what? We are there. We're in that. We are Thursday. Memorial Day was Monday. So we're in the period. This is days, not weeks away, I think. It's a big step for the bill, which on its first vote had failed to get the majority it needed to advance. This caused the bill to stall as lawmakers were sent back to the drawing board to make changes, blah, blah, blah. Finally, both parties relented. Everybody got their little free, their pork bellies and all their kind of shit thrown in there. And so therefore, the recent crop of changes was enough to get the vote over the hump, because this time the Senate voted it yes, 69-31, which is a big dick move in the other direction from what the first vote was. Anyway, shortly after the bill advanced, financial institutions wasted no time hopping on the stablecoin bandwagon. So a bunch of banks realizing 100% that this is happening. So you got JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, and other large commercial banks starting the early stages of conversations about banding together to launch their own stablecoin. This smells like a cabal. This smells like the euro dollar inside the US. The euro dollar. I don't know. Remember, whenever there's a crunch for liquidity, currencies will pop up. That's why the whole dollar peg to gold thing never worked and was never going to work. Triffin's dilemma and whatnot. So anyway, when there's a need for cash, credit, and quality collateral, the universe will create it, right? Or people will just go broke. So so it's not just JP Morgan, Bank of America, Citigroup, Wells Fargo. There's a bunch of other large commercial banks, but they all started kind of talking about this idea that they are going to band together to compete by launching their own stable asset with these crypto native companies when it comes to stablecoin products. If you're a bank and you know that your clients can leave your bank and take their $100 and go park it in a stablecoin somewhere and earn 4 or 5%, and you're paying them 3 basis points, it stands to reason that the clients are going to take their $100 and tell you to truck off on their way out, right? There's no love lost. They're like, I hate you. You charge me. I'm going to go where banking is not only free, but where I get paid. And the bank says, well, wait a minute, Mrs. Smith, if you take your $100, we have to unwind $900 worth of loans. To which Miss Smith says, oh, really? Really? You got $900 at what percent interest? So my $100 is making you 5% here, 6% there, 7% there, 6% there, 5% there, stretched out 9 times, and you're giving me 3 basis points? Fuck you. Which is what people should say. You don't have to say it like that. Anyway, like I said, I'm uncertain today, so can't be held accountable. Anyway, with the new administration in the White House, digital currency related and adjacent businesses and opportunities are receiving increased interest, obviously, and stablecoins are leading the charge. Although they've existed, you've had stablecoins since 2014. They gained a lot of renewed popularity this last year and this year as they are emerging as highly profitable. Obviously, Circle going public And that's probably going to be oversubscribed. So it's this kind of highly profitable, relatively low risk product in the digital currency world. And it's likely one of the key reasons that both old and new players want to enter or increase their presence in the stablecoin market. So you say, okay, great, but why are banks so interested? Well, the idea that they would just lose deposits, right? So, but otherwise, if an entity launches a stablecoin beyond being licensed and compliant, it needs to ensure that its stablecoins are in circulation. All the stablecoins they have out there, unlike Tether, are backed 100% by cash or cash equivalent. Cash or cash equivalent. So many stablecoin providers choose treasury bills, T-bills, short-term on-the-run T-bills, as their cash equivalent, which means that they get to passively rake in roughly 4% of the money that they have stored in those T-bills. They basically get a free account to invest in T-bills. You see where I'm going with this? Do you see where I'm going with this? And it may not sound like a lot, but if you operate a multi-billion-dollar stablecoin, you're making 3.8, 3.9, 4% on a big giant chunk of money for nothing, for doing zero. You can be uncertain all fucking day as long as the money. And this is why stablecoin companies that don't, the ones that cheat are just fucking greedy because you don't need to be. It's free money, dude. It's so much free money. God damn these people. No. I told you I was uncertain today. No. I was uncertain. Remember, keep up, Andrea. When I'm uncertain, rules don't apply. Remember, those of us with uncertainty, myself, Sean, Lydia, we're uncertain today. Can't be held accountable. Anyway, if you have billions of dollars in a stable coin and you get 4% of billions, buddy, come on. 4% on a million is what? Let's do some quick head math. $40,000. Is there anybody here that wouldn't like an extra $40,000 this year for doing nothing? Raise your hand if you don't want $40,000 for doing nothing. Okay. What about $1 billion? What about $1 billion? 40 million. 40 million. What have you done? The same nothing. You've done nothing. And you just made $40 million. And that's with $1 billion. What about 10 billion? 400. What about 100 billion? 4 billion. It's funny money. And as long as you hold it in treasuries, you just put money in your pocket. That's all you have to do. So of course, banks are like, hey, this is pretty good. This is even better than some of our scams. Yeah. So I am curious to see what banks would end up paying on those. I don't think it's going to be the same rate we get with USDC, but we'll see. It's going to be a weird situation. I think banks realize they have to do this or the end is nigh, right? So, anyway, big banks, typical big banks, JP Morgan and Wells Fargo and Citi and all this kind of stuff, they saw the endeavor before as being too risky because it would mean that they would be operating in this kind of weird, uncharted territory with unclear regulation, which typically isn't worth the risk in a highly regulated industry like banking and finance. However, the Genius Act changes this. The Genius Act introduces a comprehensive regulatory framework for stablecoins that provides regulatory guidance and oversight for both those looking to issue stablecoins and stablecoin consumers, and effectively creates the stablecoin regulation that both digital asset incumbents and banks are needing. So the Genius Act gives these entities confidence. It gives them guidelines. It gives them a roadmap that allows them to do business legally and compliantly. And the banks know they got to get on board, or they're going to lose deposits. So with the proposed changes, both digital asset companies and traditional finance, TradeFi or legacy, some people call it, saw an opportunity to introduce a new use case for stablecoins, having them serve as the infrastructure for banking transactions. Like, oh, wait, so stablecoins would replace the scammy, bullshitty SWIFT system where everybody gets a little piece of the cash on the way around and it takes like days and days. And we could just transfer that into crypto and do it in like 6 milliseconds. I guess it does sound like a good idea. Like, yeah, anyway. So previously, the top use case for stablecoins was as a safe haven asset for traders looking to avoid volatility in crypto. You would go into the crypto space with your money, and then you would punt out into stablecoins if you wanted to hide. Like, okay, wait, let me just wait here and see what's going on, and then I'll go back into some more crypto. But it was still a step to get back to the regular society. It's still a step. You're not back in your bank account yet. We're not paying bills out of Coinbase yet, right? Yet. So anyway, the new stablecoin legislation on the table, it looks like that's going to change. So now stablecoin issuers are looking to have their stablecoins be key pieces of infrastructure that live within banking and financial institutions, primarily for interbank settlement, for remittance payments, for repo transactions. Repo, remember, there's over $5 trillion of repo every day. $5 trillion in repo every day. More. So think about that. Internal treasury operations. So the stablecoin use case is being explored because stablecoin payments can typically be settled instantaneously, obviously at a much lower cost, and be facilitated 24/7, unlike the bullshitty TradeFi legacy finance alternatives like wire transfers, where they sit on your money and make interest, payments over the SWIFT network, where everybody sits on your payment and makes interest, all the really ridiculous high fees and all this kind of crap. This starts to change who the customer of a stablecoin might be. So with stablecoins as a safe haven asset, the biggest customer was digital asset exchanges that needed the stablecoin for liquidity purposes in various trading pairs. But as plumbing for the global financial system, the customer becomes banks, payment service providers, and other financial institutions that need to keep stablecoins on hand to facilitate transactions or cash out the recipient in the transaction if they wish to keep their balance in stablecoin. This gives another way for banks to keep their depositors and their deposits at the bank. They have to be able to offer almost as good of service, not quite, almost as good a service as those of us that have what we've learned to experience in the crypto space, as far as speed of money, how fast you can move around, how easy it is, that kind of stuff. If they don't offer something similar, people aren't going to switch. It's been a long time since I've sent money back to Chase, other than paying my car payment. I'm not sending money to Chase to leave it in there. And every time I go in there to do a wire to get my money out of there, they go, oh, if you leave $250,000, dude, are you nuts? Why would I leave 250,000 anythings, 250,000 pennies? You sorry ass pieces of shit. Anyway, yeah. So no, I'm not going to help Chase make money on my money and then pay me a pittance. Another thing I did, I think I told you guys, they have a sweeps account. Basically, Morgan Stanley sweeps money out of E-Trade that's not being used all the time. They just sweep it into this where they're making money on it. Lending, cash equivalents, bullshit like that. Dude. And they go, oh, we pay you 3 basis points. 3 basis points? 1, 2, fuck you. How about that? So I told them twice. I said the next time it's gonna be a lawyer and it's gonna be a complaint with the California State's Attorney General's office. You don't get to sweep my money and go make money off my money without my permission. So I opted out of everything. I unsigned everything. I'm like, if you've been put on notice twice. I said, the next time is a lawsuit. I said, because I guarantee you there's hundreds of thousands of people on your platform that have no clue that you guys are making money off of our money. Whoa, what a bunch of bullshit. Anyway, let's see. No, tomorrow we can look at IBIT option stuff for tomorrow. Not today. Let's see. Why are you still with Chase? They're rippled. They are rippled. I am in the process of moving over. I have a buddy of mine who is a private banker with Bank of America. Has a private banking sector that's a separate bank. It's not attached. It's owned by Bank of America, but it is not a part of Bank of America, meaning if there was an unwind at Bank of America, you don't get unwound. So their private banking is a separate institution. Anyway, I am talking to those guys right now about doing something. But that's yes, I do want to get out of Chase, obviously. I think what I'll do is when the Chase is garbage. Anyway, so with stable coins as a safe haven asset, it makes it very interesting if banks all come together, they issue a recognized stable coin that has some or most of the benefits of what we get with stable coins as it is right now. And it would certainly make life easier if banks honored stablecoin payments so you could just push money to your bank and back and forth, and you didn't have anyone in the way. There was no jerk off in the middle being like, we can't release those funds. Why? We just, we got to sit on them for a week. Yeah. Why? Well, ACH. You're just saying words, dude. You're saying fucking words. You're not saying anything real. This is why I start cussing these dudes out, man. At Chase, this is why I start cussing these dudes out on the customer service calls, because they're bullshit. Anyway, Chase, am I right? Speaking of Chase, they tried to make headway on this use case yesterday, years ago, with their JP Morgan coin, the JPM coin, on its private blockchain called Connexus. It used to be called Onyx. For those of you that are like, wasn't it called Onyx? Yes, it was called Onyx, but it didn't pick up a lot of traction. JP Morgan clients only were able to take advantage of the JPM coin, which severely limited the product's ability to grow because it was just those people, and none of us knew about it. At the time, there was a bunch of regulation related to digital assets, and the bank was very unclear, and so JP Morgan positioned itself as a settlement product rather than a crypto product. The product does still exist and has allegedly processed 2 billion in daily transactions through 2024. It's not terrible. But again, it's in a walled garden inside Chase, and therefore it's kind of under the radar and people aren't following. If you're transacting 2 billion a day, it's pretty good. It's not nothing. I mean, it's something. I'm not uncertain about that. So it's understandable because at the time of the JPM coin launch a few years ago, stable coins were kind of murky. They were boring. They were not very often talked about. And that's because the companies that were running stable coins were just lining their pockets with cash until they figured out, like Tether, that you don't even need cash or cash equivalents. You can just issue stable coins willy-nilly and no one cares because no one audits and no one goes to jail. And even when they do, you go to jail for one night, you pay $100 million fine, and then you get out. And you get to keep doing it forever. And that is the stablecoin business. I guess I am in the wrong of these businesses. I should have been doing what those crooks were doing, just running a counterfeiting machine off my fucking laptop in the Bahamas. Anyway, but with the Genius Act on the table and Circle, obviously the top stablecoin provider in the U.S., making a series of moves ranging from announcing it's going public to announcing the Circle Payments Network, CPN, which is like a global payment system that runs on blockchain-based rails and settles payments with stablecoins. Banks are now scrambling to offer similar products. Makes sense, right? So will the market get crowded? Yes, it's going to be a very crowded market. No good experience with Bank of America. Yeah, I mean, I guess I would say I would probably want to talk to people that have been on the private banking side of Bank of America, not, you know what I mean? Like that other bank. I want to know about people at that other bank. And yeah. Let's see, Nick, you may, no, we don't have a DeLorean. We do not have a DeLorean. Let's see. What inventor or business leader that you've never met would you like to talk about? Would talk to about making? No, Craig, I'd go back to 2009 and start buying Bitcoin. There's no other place in history. I don't want to go back so far that like they don't have dental care and like basic food and like air conditioning. So nobody. I would go buy Bitcoin. I would maybe try to figure out who Satoshi is, but we all know it's Adam Back. Yeah, I would just go buy Bitcoin, and I wouldn't buy too much of it. I would buy it over a 4 or 5 year period because I don't want to disrupt what would come to be. I don't want to end up buying it and making it wonky and then not, yeah, that's it. Yeah, I'm just going back to 2009. You guys can do whatever you want, but I'm going back to 2009, making that money, yo. All right, let's see. Will the market get crowded? Well, the Genius Act isn't law yet, but the momentum is there. And the main thing you want to take away from the Genius Act is this. It will force these stablecoin issuers to hold half of their assets, half in treasuries. Half. That's a lot. Many millions, many billions, many hundreds of billions, some trillions. Half of that will be in treasuries. No wonder all these politicians got behind it. It's kind of a very obvious one, it seems like. Anyway, that's where we're at. It probably won't be completely smooth sailing, right? There's going to be some little perturbations and some weirdness, but stable coins are coming. And it won't really matter whether a bank uses USDC or Circle's payment network or whatever stable coin the conglomerate of big banks decides to create. It will serve the same function, and it will make life easier for us. Right? So, yeah, that's all I got. Let's see. Huge banker? You mean huge banker? You mean like he's just very chubby? He's chubby, and you know that he's rich because no one could eat that much on a working man's budget, something like that. Like just a big chubby banker. Told you yesterday that the future of authentication biometrics will be done on our phones. Now the future of AI. I said using cell PH for financial transactions for scam receives. You should always use desktop or laptop. Well, yeah, but for most people, the phone is the way you do transactions, right? You go and you do your touch to pay and all that kind of stuff. Oh, Charles Schwab. Yeah. I mean, they're not unright. Most people, there's always going to be people trying to steal your stuff. Always. And there's always going to be people trying to build new innovative things that make life easier. And if it makes life easier, it makes it easier to steal your stuff. So you've got to tread somewhere in the middle. Yeah. And don't gamble. Listen, there's enough ways to lose your stuff without gambling. Don't gamble. So anyway, stay in school. Don't do drugs. Yeah, waiting for the butterfly migration. Remember, be uncertain. Be uncertain. It's a get out of everything free card. You just claim uncertainty today, and nothing you do is you get pulled over by the cops. You're like, guys, I'm uncertain. The tariff stuff, and I'm just very uncertain. I'm uncertain about the speed limits. I'm uncertain about all of it. How can they disagree? It seems pretty ironclad. Anyway, yeah, I wouldn't go too deep into that, Howard. Yeah, I wouldn't be getting my marching orders from Trump's family investments. Just be careful on that. All right. Anyway, stay in school. Don't do drugs. Don't do anything that my poor, insolvent, drunk, strung on meth grandmother or Brandon wouldn't do. We can only imagine the weather's nice there. It's going to be good here too. Right around 80. It's going to be a swimming day. I'm going to be honest. It's going to be a swimming day. We will see you tomorrow. There was a trade that went down. So check for UDIs, check behind the scenes. You should see that order. I think Brandon got that up there. We'll see if anything else pops today. Otherwise, we'll have some good roll off tomorrow. and we'll be repositioning and rolling into new contracts. Delicious. This will be our best week so far by a pretty good margin. So, yeah, there we are.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish.